president and founder of iknow.com and co-founder of MarketClub with you. Midday update for Thursday, the 8th of November. Okay, the next big thing, drum roll please, Obama insurance. You know, yesterday the market voted on the election results, and we saw the biggest one-day drop for the year. Did yesterday's market action indicate a major change in direction, or was it just a blip in a longer-term bull market? Regardless of the eventual outcome for the major markets, every investor needs some Obama insurance. Here's how Obama insurance works. Let's begin by looking at where we closed last Friday in the major markets, which we'll do in just a moment, and see where they're trading now. Bear in mind these markets can change very quickly, so we need to check this again tomorrow on Friday. That's it. The markets are telling you that gold and silver are trading higher now than they traded last week. That in and of itself isn't enough to buy Obama insurance. What we need to do is look to see where the gold and silver charts are currently indicate that the long-term monthly trend remains positive for both of these metals, while the intermediate-term trend continues negative. Okay, here's the strategy. Wait for the intermediate-term trade triangle to turn green. That's positive. Then pile in and get some Obama insurance because you're going to need it. Look, the future promises to be an exciting one that's offering tremendous opportunities for smart investors. I'm comfortable in saying that MarketClub's trading triangle technology, which has an amazing record, which you can see on the web, can help you maintain and grow your nest egg in the months ahead. So let's take a look at the markets right now and see what's going on. So here we are. I'll go right to the portfolio manager. And you can see we're on the defensive again today in the S&P 500. As you know, we've been out of this market for some time. You can see there's our triangle there. We've been since September 12th. Almost a month we've been out of this market. So we've had no pain in this market whatsoever. Last week we closed at 14.14 and we're currently trading at 13.88. So we're down for the week and we're down for the month. This is not a good sign. Now remember, our stimulus came in right here. This is when they had QE3. So it's done nothing. In fact, I would argue that the stimulus is actually a reverse. It's actually hurting the market. And that's why we showed you the 100 years of capitalism last night on the TV show. So let's take a look and see what else is going on in these markets. So moving on to the Dow. You can see the Dow is also under pressure. Still, we have a long-term monthly still positive, but nonetheless, it isn't looking very, very good. There's not a lot of support under this market. You can see quite clearly we are seeing a lot of resistance right over the market right now. So just even if we look at this market, you can see right over here, the market's rolling over to the downside. We want to watch that very, very carefully. So let's clear that screen off and go to our next market. And that's going to be the NASDAQ. Now, the NASDAQ is suffering appleitis. Appleitis meaning the apple is in a bear market. The NASDAQ isn't quite there yet, but it's getting awfully close. And I think that's the key thing to watch right here. I think the key level there for us would be the 2,890 level, where about 30 points away. We could hit that maybe early next week. But nonetheless, this market is not acting well. And certainly Apple is in a bear market. Hard to believe. I think it's shocking to a lot of people. And a lot of investment managers who've stuck with Apple for a long time probably say, well, I'll stay with it. We've had a 20% pullback from the highs. That's not a good thing. So let's go to our next market. This is crude oil. Crude oil again on the negative. Everything's negative now. A slight tick up on crude oil. Crude oil is actually closed at 84.85 last week. It's a little bit flat to higher for the week, but we do have a little bit of a divergence going on. You can see if you look at this market, you have prices sort of, I'll just kind of do that. That's where sort of the direction they're going, but the divergence, you're not following in the momentum to the upside. So I wouldn't be too negative on this market right now because it looks like it's beginning to find support around the 84.50 level. So let's clear the screen. We're also going to be telling you about 5 stocks to avoid today, right now. If you're in them, get out of them because they're going to go lower. So let's move around really quickly because I want to get to the stocks really quickly. The euro dollar, we've been talking about this for some time now, the 128 level, which is right here. If it goes below there, that was the line in the sand. If you remember, we talked about the 128 area right here as being the line in the sand where we're clearly below that, and we're heading for the 125. That's our target zone on that market. Now, you do have the longer-term monthly still positive, but the weekly and the daily are negative, indicating that the momentum and the prices are going lower. So let's just clear the screen off, go to our next market. And the next market we're looking at is gold. Now, gold is one of the few markets that's actually higher for the week. Last week, we closed at 1,677. Yes, that's right, 1,677. And to put that in perspective, I'll show you. We closed right down here. Right here, okay? We're currently trading right here. So the market's telling you right now that we are in a beginning of a bull market. We're over the parabolic. Long term is positive. Short term, very short term, is positive. Only the intermediate term trend here is saying that the prices should be going sideways or even down. So this is going to be overcome, I think, next week, possibly. And once this kicks in right here, this particular triangle, you need Obama insurance. Period. Because this market can and will go a lot higher. So let's clear the screen and go to our next market. By the way, just to give you some perspective on gold, and this is what's really amazing to me and to other professionals, and that's going to go to, let me just go to maximum because I want to show you this trend has been going up since 2004. It's actually been going up longer than that. It's been up every year. Gold has closed higher on the year. This year, we're still higher for the year because if you look at where we started the year, you can see we started the year right down here. On January 2nd, we closed at 1584, and we're currently trading at 1724. So I think we're higher for the year, again, keeping that intact. But the big number here is 1,800. Over 1,800, this market's going to rocket over $2,000 an ounce. So watch that very carefully. This is your insurance once that green triangle kicks in. So let's go to our next market. And that's going to be copper. Copper is kind of like towards the lower end of the range. Longer term, positive. Intermediate term, sideline. So you're out of this market pretty much until we see some trend develop. Silver is the other positive. Last week we closed at $30.85. It's currently trading at $32.13. Let's scope this in so it's much closer. Let's just go 3 months. And you can see the action is, we closed right here last week, right in this 50% pullback, perfect Fibonacci numbers, starting to go up. I would say today, if we see this market go over 32.40, which is not that far away, some 27 points, 27 cents, definitely it's going to look very good for next week. So let's see how that works and how it closes this Friday. Very, very important. So moving along, we're going to be looking at the 5 stocks to avoid. McDonald's, yes. First time they've seen a drop in their sales in 9 years. It's significant. There's the monthly trade trial kicked in at 86.15. It's currently trading at 85.51. Again, this is a market to be out of. Hard to believe, but that's the way the trade triangles are telling it. Next market we want to look at, Whole Foods. Yes, another monthly trade trial kicked in there at 91.67. Currently trading at 90.77. Again, this is not a good signal for this market. And let's scope this out just a little bit further. And let's go further. And you can see where we actually got out of this market at 95.72. And we got in 95.70, so it's about a scratch trade there. So we didn't lose any money, but we avoided this drop. We just entered this position if you want to either get out of the market or get short this market. And I love Whole Foods, so just don't get me wrong there. Now this is Concur Technologies. Again, this is a signal at 61.29, currently trading at 61.51. You can actually get in a little bit better here. You may want to wait on this one and maybe sell it, maybe even get up to 64. It would look a better sale. And again, if you're in it, don't be in it. And this is Neighbors Industries. And this is, again, a stock that gave a sell signal today towards the low end of its support level. So I don't think it's going to have a lot of room to go down. If we scope this out to a maximum, we'll see. So it's really this level is around the 10 level. It actually has very, very good longer-term support. So let's see how that plays out. Moving along to Windstream, which is our last stock of the day to avoid. And if we go closer in here, you can see one straight down, just looks like well, I won't use the word, but it looks terrible. And the trend certainly has been down. You can see we got out of this market at 987, and that proved to be a good move as we're currently trading at 857. So, but percentage-wise, it's a good move. And you can see this market has really done nothing but go down since 2011, since the beginning of 2011. So nonetheless, big trend down. There's not much below this. You'd have to go down to maybe 8 or even down to 7. So I think the trend is your friend. If you're in this market, we recommend bidding out. So tomorrow's going to be an important day. It's Friday, the end of the week, and a lot of people are going to be wondering where these markets are going to go. If they don't rally, just be on the guard, on the lookout for a trade triangle early next week in gold and silver. Very, very important. So that's your Obama insurance. So I'm Adam Hewison for Market Club. Thanks for stopping by. Every success in the markets. I'll be back tomorrow, the same time, the same place. So till then, good trading.